She thought her medical card covered absolutely everything. She walked into the hospital thinking she's only paying a 50 ringgit standard administrative fee. But the final bill said otherwise. In fact, it was a financial nightmare that left her responsible for thousands of ringgit out of her own pocket. How does a routine procedure go so horribly wrong when you are fully insured? Let's talk about the hidden clause you probably missed. Imagine this is a late Tuesday night and you experience sudden excruciating abdominal pain. It's an emergency. You rush to the nearest private hospital. You hand over your medical card at the counter, completely confident. You get admitted, you have a simple, successful day surgery procedure, and you're ready to go home. But when it's time to discharge, the billing department hands you a massive invoice. Why? Because that hospital you rushed to happened to be a non-panel hospital for your specific insurance policy. And tucked away deep inside your policy contract was a tiny, easily overlooked clause: co-insurance for non-panel admission. Because of that single word, a standard medical card swap turned into a major financial crisis. Alright, let's break down exactly what happened here so it never happens to you. First, you need to understand the difference between panel and non-panel hospital network. Insurance companies partner with specific private hospitals. These are their panel hospitals. When you go to a panel hospital, everything usually goes smoothly with direct billing and letter of guarantee. But if you go to a non-panel hospital, a lot of policies trigger a clause called co-insurance. What is co-insurance? It means you agree to split the bill with the insurer. A very common structure for non-panel hospitals is an 80-20 split. The insurer pays 80%, which sounds great, but you have to pay the remaining 20% yourself. If a major surgery costs 50,000 ringgit, that 20% means you are legally obligated to pay 10,000 ringgit out of pocket. Suddenly, your full coverage medical card feels very empty. So how do you protect yourself and your bank account? You need to do 3 things right now. First, check your policy schedule. Pull out your insurance contract or log into your portal and look specifically at the schedule of benefits. Look at the terms, co-insurance, co-payment, or non-panel penalty to see if your plan has these limits. Second, download your insurer's mobile app. Every major insurance company in Malaysia has an app that lists their updated panel hospital. Know which private hospital near your house and workplace are on the list before you ever need them. Third, call the hotline. If you have an elective surgery coming up, meaning a planned non-emergency procedure, always call your insurer hotline before you check into the hospital. Double check that the doctor and the hospital are fully covered under your specific plan. Insurance policies are written in heavy legal language, and it is incredibly easy to miss this fine print trap until it's too late. If you're unsure whether your current medical card has a hidden co-insurance clause, or if you want to make sure your coverage is actually foolproof, I want to help you out. Head over to keithwong.my right now. You can securely upload or share your medical card schedule of benefit there, and I will personally review it for you to check for any hidden clause completely free. Let's find those traps before the hospital does. If you found this video helpful, please hit that like button, subscribe for more Malaysian personal finance tips, and share this with a friend or family who thinks their medical card covers 100% of everything. Go to keithwong.my, get your peace of mind, and I'll see you in the next video.